Good evening to all. Am I audible? Anyone can tell. Am I audible? Anyone can tell that whether I am audible or not. Shall we start or wait for something? I think Mr. Joydeep Patel, can you tell whether I am audible or not? Give your comments in the comment box. Yes. Then let us start. Our today's discussion on cost audit in coal industry. The coal industry is the largest industry in India as well as in other countries like Australia, China, etc. The coal industry cost audit is something different from other manufacturing and service cost center, service industries. So our today's focus is the intricacies and the problematic portion of the cost audit in coal industry. How to deal with this and how to proceed for cost audit in coal industry. Now, see this slide. Coal industry is divided in India among three segments. Number one, Coal India Limited, whose market share is 82%. Singareni Collieries Company Limited, whose market share is 9.5%, and some private players whose market share is 8.5%. This is total 100% of the coal industry in India. Now, as 82% is the share of Coal India, we are talking about the coal industry. And you know from my profile that I am from coal industry. I retired in 30th April 2019 from Coal India Limited and started my own practice. And after that, I have done a number of cost audits in coal industry as well as different other industries also. And regularly coming in live streaming in LinkedIn, YouTube, and Facebook. So I need not waste my time to introduce myself. Those who do not know me, please go through my profile. You will get all the details in my profile. Now concentrate on our topics. So as 82% share holding by Coal India, we are talking about the coal India only, because others are so small. They are following the pattern and techniques and methodology and record keeping of coal industry itself. So if you understand the coal India, then you will understand the coal industry of India. Now, there are Coal India has 8 wholly owned subsidiary companies. Number one, Eastern Coalfields Limited, which is in Asansol, mainly West Bengal and Bihar. It is working field. Next, Bharat Coking Field, Bihar and Jharkhand. Central Coalfields Limited, that is in Jharkhand. Northern Coalfields Limited, that is in Madhya Pradesh. Mahanadi Coalfields Limited, that is in Odisha. Southeastern Coalfields Limited, that is in Chhattisgarh. Western Coalfields Limited at Nagpur, that is in Maharashtra. And Central Mine Planning Design and Institute, CMPDI, that is in Ranchi, that is in Jharkhand. These are the 8 wholly owned subsidiary of the Coal India Limited. Coal India do not operate only operate one mine, that is NCL, that is in Margarita, NEC, Northeastern Coalfields, that is owned by the Coal India Limited holding company, a standalone company. Others are operating through 8 subsidiaries. And among the 8 subsidiaries, 7 subsidiaries are production oriented, and one CMPDL is the research company, and it is designing and planning of the coal mining, etc. And it is only a consultancy company. They give the consultancy to the other subsidiaries of the Coal India Limited. Now, subsidiary of any subsidiary, you can see there are different cost centers or profit centers. What are those? Head office, different areas. Different areas. One subsidiary may have 10 or 12 areas under his control, administrative control. Central workshop for E&M machinery repairing, central workshop for excavation repairing, and central hospitals catering 2 or 3 areas. In a subsidiary, there may be 2-3 central hospitals, training centers, washery, etc. Now, what has happened? Any subsidiary directly control these departments or profit centers. Again, if you consider in area perspective, head office is the administrative office, different area is the production areas. When production are coming from that area. Central workshop for repairing of E&M and excavation, central workshop, hospital. These are all subsidiary service cost centers or service cost centers as a whole. Again, if you go through the area hierarchy, in area there is a different mines. Under area there are different mines. Regional workshop mean for particular area. Regional stores mean for that particular area. Combined sliding for rail dispatch. 2-3 mines coal dispatches through a single mine, single siding. That means it is not necessary that each and every mine has a coal siding. There may be 2-3 collieries dispatched through a single siding. Area office, which is the administrative office of that area. Regional hospital, that means that is a hospital of the catering the manpower, medical treatment to the manpower of that area. Area training center, giving training to the area personnel. Mine rescue station. These are the hierarchy of an area. Why I am telling all these things? Because in each and every department or each and every office has the cost centers. Some of them are also profit center. So if you understand the cost audit, you have to go through the hierarchy of the organization of coal industry, how the data is flowing, how the documentation has been flowing. You have to know that. Otherwise, you cannot conduct the cost audit. Up now come under a one mine. In one mine, there are different inclines and coal face. It is not necessary that one mine is only one incline. There may be 2-3 incline in under one mine. There is a manager office, sub-area office, mine workshop, mine store, mine hospital, mine training center, CHP and coal bunker, siding of rail dispatch. These are the all are cost centers. All are cost centers for a particular mine. Under a mine, these are the cost centers of the mine. Some of them different inclines and coal phases are the production cost center, and others are supportive center, that is service cost centers. Now, nature of business. What is the nature of business of the coal industry? Extraction of coal, raw coal, underground and OC mines. There are two types of mines, that is underground mines and open cast mines. Conversion of raw coal to washed coal through washery. Coal India or coal industry also sell washed coal. The value of the washed coal is much more higher than the raw coal because the ash content will be less in washed coal. Dispatch of rail, road and conveyor belt, MGR, etc. These are the three major activities or three major business areas of a coal industry. Now, how the coal has been extracted? There are two types of methodology. One is underground mines and second is open cast mines. Underground mines is solid blasted. In underground mine, coal has been blasted, solid coal is blasted in explosive or detonator with the help of explosive and detonator, or through mechanized mine, it is through short wall, long wall or continuous miners. But in open cast mines, there is also, first of all, we have to remove the OBR, overburden. That means mud. You have to remove to expose the coal. After that, solid blasting is there for the extraction of the coal, and otherwise, if it is a mechanized open cast mine, surface miner will be the machine, ideal machine for operating in the open cast mines. In underground mines, to go to underground, first you have to prepare a tunnel or incline. After that, person going to the coal face and solid blasting is there, or continuous miners or short wall, long wall, HDL, etc. Miners are there. Now, equipment used in the underground mines. Number one, side distance HDL, LSD, short wall machine, long wall machine, continuous miners. These are the different machines which are used in underground mines. SDL, first when the coal mines have been come under a mechanized mine, living loader, manual loader, SDL has come first in the coal industry for helping the extraction of coal. Next come LHD, load hull dump loaders. Third comes short wall machine. Next comes long wall machine. Latest technology is continuous miners. It is not nowadays it is prepared in India also. So these are the different machineries used in the coal mines. Heavy HEMM means heavy earth moving machinery used in open cast mines. Shovel, dumper, dragline, surface miners and dozers. Shovel, you can see the shovel and dumper combination is the first come in the open cast mines. After that, there comes in the dragline. Now later dozer and latest technology is surface miners. These are the equipment used in open cast mines, and these are all commonly called as HEMM. That means heavy earth moving machinery. Now methodology of coal dispatch. How the coal has been dispatched. Now coal has been, you know, till today, till now you have learned what are the how the coal industry segregated segment of the coal industry. You've seen the Coal India Limited has 8 subsidiaries, and what are the hierarchy of the any subsidiary? What are the hierarchy of areas under one subsidiary? What are the hierarchy of mines under one area? And what are the different technologies used in the extraction of coal, that is underground and open cast mines? What are the equipments used in the underground and open cast mines? Now, come to the dispatch. After production, you have to dispatch. That is a coal handling plan, CHP. Some coal has been dispatched through road. That is directly, it is loaded in the truck from coal stockyard. Rail dispatch through sidings, dispatch through belt conveyor or merry-go-round. If the consumer is nearby, so coal is being dispatched through belt conveyor or merry-go-round. Now cost center. At present, as on today, the Coal India is having all mines are as per cost accounting policy. All mines are production cost centers. All hospital, workshops, stores, training centers are service cost center. Cost centers are absent to the mines to absorb the cost in production unit. This is the concept of cost production cost center and service cost center at present. But now the Coal India is reviewing its cost accounting policy, and as I am the lead cost auditor of the coal industry, Coal India, I am also a part of that. Now, the Coal India has introduced SAP ERP. So, micro level analysis and micro level data can be captured. So, whole of the concept is changing. What are the changes? Mines will be treated as center, and under mines, each and every offices or department are treated as cost centers. This is the this is the scenario coming in the next future. So at present, what are the system? All mines are production cost centers, but workshops, stores, training centers, service center, these are all service cost centers. And this is apportioned to the mines depending on the services rendered. Next, how the data, what are the data sources? Financial data are captured at mine level. All mines are having a unit code, and under unit code, all the data are captured in different financial code. Financial data are captured also in regional workshop, office, stores, etc. That means in service cost center also. Financial data are also captured at headquarter level, at CI level also. And now, how these data are accumulated, apportioned, allocated, I will discuss in the next slide. Now, there is no separate set of cost records maintaining the cost of audit. Different GL code, that means financial codes, and nature-wise, each and every nature of expenditure has a GL code, and that GL codes are mapping in with the average cost statement of the cost annexed to cost audit report. Mapping is at present at mine level. All indirect expenditure are treated as within the mine, treated as the production overhead up to the area level. All expenditure related to the employee are direct employee cost. Expenditure of central hospital apportioned to the basis of manpower on the mines. That means these are come under direct employee cost. Company headquarter and CIL headquarter expenditure. Company headquarter means subsidiary headquarter, or CIL means Coal India. These are apportioned on the basis of production to each mine. Expenditure of central workshop, that means CMP real, the research team, that is the consultation firm. That cost they are billed to the different mines on actual basis, and that has been absorbed in the mines itself. This is the record keeping of the in coal industry. So you have to know what are the impact of the different offices or different cost centers into the mine. First, you have to judge. For judging that, you have to know the organization hierarchy. That's why I have told in the beginning of my live streaming, that how the coal industry has been divided and how the data is flowing. Now, how to prepare average cost statement? Mine-wise GL code has been with cost elements of average cost statement B2 as per cost accounting standard. Different general ledger code has been mapping with the defined cost elements of the average cost statement. Mine-wise opening stock and closing stock are valued at cost. That cost per ton has been taken as 31st March ka. The total cost of service cost centers, that is regional workshop, regional hospital, regional stores, area office, etc., are apportioned to the different mines on the suitable basis. The cost of consultancy as a CMPDL is booked under production overhead on the basis of actual billing. Cost of central workshop charged to respective mines at predetermined date, and at the end, over and under absorption are charged to the mines itself. That means at the year end, there will be no over and absorption for reconciliation statement. This all will be absorbed in the cost. Now, area-wise average cost statement is prepared. How? You have prepared mine-wise average cost statement after directly allocating the cost of the mine and taking share of the absorbed service cost center. After preparing of the mine-wise average cost statement, you have to consolidate the mine-wise average cost statement to get the area-wise cost statement, average cost statement, and that area-wise cost statement, average cost statement will be reflected in the area-wise area audit, and that should be reconciled with the area profit and loss account of the financial audited accounts. So you have to prepare first mine-wise average cost statement. Then you have to consolidate that data for area-wise cost statement, and the area-wise margin arrived after consolidating will be reconciled with the area-wise audited profit and loss and account profit and loss. This is the whole scenario in coal industry. This is the annexure. I need not all know the different annexures, so I will not waste my time. These are common for all industries. This is nothing but there are 4-5 paras here. Now I come to this direct point, audit program. For conducting cost audit in coal industry, you have to plan or first prepare audit program. Not only for coal industry, but also for any audit. You have to prepare audit program first, and then you start audit. Now, visit of production and service cost center. First point, visit of production and service cost center. Because if you do not visit the production and service cost center, you do not visualize that documentation and the workflow. What are the methodologies applying? How they are operating? You have to know this for conducting the cost audit truly. Discussion with defined HODs. HODs mean head of the department. Collection of mine-wise quantitative and other documents or information. Verification of those for basic records. Forming opinion on the basis of observation on verification, and writing a good and value cost audit report. First step, you have to visit production and service cost center to have the opinion that which cost center, which service cost center render service to which production cost center, and in what weightage, and it is weightage. That only you can ascertain the apportionment of service cost center. If you discuss with the HOD, you will know better the program, the mechanism or data capturing process of the coal industry. And during this period, you have to collect the quantitative and other documents. Which document I will tell you in later. You have to collect the quantitative data and documentation, document information, etc. Next, you have to verify those data with the basic records, and next form opinion for audit report, and writing a good and value added report. These are the 6 steps for conducting the cost audit. Now, what are the data or information required for cost audit in coal industry? I have talked that while you are visiting the different production cost center and service cost center, you have to capture some data, information. And now, time has come to tell one by one the data or information. What are the data or information you have to collect? First, you have to collect physical copy of audited profit and loss account and balance sheet. That is signed copy. You have to with unit trial. Unit trial means mine-wise trial. Second, grouping, how they have grouped financial code or general ledger duly tallied with trial balance. You have to take this and list of foreclosed contract. Foreclosed contract means the contracts which have been closed earlier than the scheduled time due to some reason, due to the fault of the contractor or due to some other reason. List of foreclosed contract. Next, hindrance register maintained for civil contract, coal, OB and OB transportation and other contractual work. In coal industry, not only in coal industry, in each and every coal industry, there is a hindrance register. And as a cost accountant, as a cost auditor, you have to collect that register and verify that. How to verify, I will tell you later. Communication of installed capacity assessment done by the CMPDR. In coal industry, installed capacity as per B1 is determined, is ascertained from the communication of by the CMPDR. CMPDR assess the installed capacity each and every year at the beginning, and that is taken in the installed capacity as per B1 in the annex to cost audit report. Next, Form H. What is Form H? Form H for production, dispatch and closing stock. Reconciliation of production, dispatch and closing stock, opening stock. And without which you cannot verify the B1, annexed B1. Next, internal audit report, OBR computation sheet. Coal industry is a peculiar industry where OBR computation is very essential part of the cost record. What is OBR computation? When the mines is started, a project report is being prepared and it has been envisaged how much OB is required to be removed to obtain a particular quantity of coal. That is the standard ratio. Maybe 1 metric ton coal, OB 5 metric ton, 5 cubic meter of OB is to be removed to get 1 ton of coal. So this is the ratio, and in this case, tonnage has to be converted to cubic meter to ascertain the ratio. That means that ratio is called stripping ratio. So you have to know the stripping ratio, and on the basis of stripping ratio, you have to compute the OBR computation sheet, because whatever the NBC as per project report does not reflect in the actual field of work. So there must be some difference. So you have to adjust that variances, that is standard versus actual. Standard means as per project report, actual means what has actually calculated during the operation of the mine, and that OBR computation, cost of OBR has been done, and adjustment between variation of standard and actual has to be ascertained, and that has to be accounted for as a industry specific expenses in the average cost statement. It is a peculiar phenomena. That's why I am elaborately tell you how it is done. So you have to compute, you have to check the OBR computation sheet. Our NK Prasad, CMA NK Prasad has been designed the OBR computation at the very beginning of the nationalization of coal industry, and this formula is still going on in coal industry, and you have to know, you can get it from institute website and can in the Google what are the formula. Monthly report containing every area or every company is maintaining monthly report containing the production machine and machine utilization, dispatch and other different quantitative data is available. Machine wise HSD oil consumption with norms vis-a-vis previous year, machine wise capacity available and utilization with respective norms as indicated in director's report as a previous year, mandates lost due to strike or abnormal situation. These are the data you have to collect. Month-wise power analysis statement indicating penalty levied, contract demand and record demand, power factor of for industry and domestic, both current year versus previous year. Next, month-wise consumption statement of explosive timber, steel support, computation of activity-wise depreciation, year-wise breakup of incentive credited in sales account and any other expenses, income not related to the year under report, year-wise breakup of credit notes issued to an incentive earned during the year under audit. Here I am telling what is incentive. Coal industry make agreement with the power sector, which is called fuel supply agreement, FSA. And if the company is able to supply 95% of the agreement agreed quantity, it will get incentive. Generally, incentive for a particular year comes in the next year. So, for a particular year under audit, you have to take into consideration the incentive part very carefully, because the incentive earned booked in the accounts may be pertaining to the previous year or may be pertaining to the this year. So you have to segregate it in prior period incentive to the reconciliation statement. And that same similar thing is credit note. What is credit notes? When the company dispatches coal through rail or road, at the end point, that again the gradation has been calculated through sample checking, and if the grade is deteriorated, that is grade has degraded, then company has to give the credit note, because company billed in the higher grade and the customer gets the lower grade, so the difference should be given in the credit notes. And these credit notes may be pertaining to the prior period or pertaining to the current year. You have to segregate all these things. So detailed analysis you have to collect during your verification, collection of records. Variance analysis with budget and previous year budget. Cost finance reconciliation statement of specific reasons for variance in the budget head. Now, you know what are the documents to be collected and what are the purposes. I have briefly told the different purposes of the different records. Now comes for verification of cost records. First, you have to verify the correctness of mapping of financial codes, that is GL codes, into the different head of average cost statement, which should be as per cost accounting standard and generally accepted cost accounting principle and company's cost accounting policy. This has to be first checked. Second, you have to identify any abnormal increase or decrease or loss. If you see, it should be taken into the reconciliation statement, should not be part of the cost. Verify the valuation of opening and closing stock, whether the correct cost of product, unit price pricing has been taken for valuation of opening and closing stock. Verify the correctness of the service cost center apportionment, whether the correct ratio has been taken or not, whether the correct share is borne by a particular mine is not, or whether there is any wrong calculation or wrong apportionment, you have to identify. Next, verify the GST and other indirect tax reconciliation for Annex D6, whether ITC has been earned and claimed or utilized correctly or not. These are to be ascertained. while verification of the cost records. Next, verify all the annexures to the cost study report with the basic records. Now, again you come to examine the civil contractor bill, coal transportation bill, OBD removal bill, etc. on sample basis to assess the internal checks and controls. Here comes the role of hindrance register at foreclosed contract. If you see that a contract has been closed earlier than the scheduled time, and the same contract has been given to the another contract and with a higher price, then the difference between the two prices should be taken into the abnormal cost and should be booked under reconciliation statement, and that should not be part of the cost. So now you understand the role of list of foreclosed contract. Why I am telling that list of foreclosed contract you have to collect. Again, from hindrance register you will see why the work is not going on hampered. It will be written in the hindrance register, and if it is on the fault on the part of the contractor, whether the penalty has been levied on the in the contractor's bill or not. If it is not, you have to qualify the report. So there are two records: the list of foreclosed contract and hindrance register is vital to verify all these basic records. Because if that has not been taken into consideration, your cost will be inflated, and your certification of the true cost of production is not be there. You have to certify the cost of production as a true cost of production. So before giving conclusion, you have to verify all these things. Next, examine the assets. Examine and assess the budgetary control system. You have to report in the report. You have to report this point. Verify cost finance reconciliation in budget heads. Verify variance analysis statement. This will give you the insights of the cost records prepared by the company and can be the base of your forming opinion. Now, there are certain treatment in the coal industries which you cannot see in other industry. Number one point, computation of OBR and its adjustment. I have already discussed. Major overhauling of HMM other machineries. If you go through the cost accounting standard 12, repairs and maintenance, you will see that there is a point that major overhauling of any machinery should be treated as a deferred revenue machine. And it is a very common phenomenon in coal industry that different each year major overhauling is there in some of the areas, some of the mines. So you have to take the list of the major overhauling on HMM to give the treatment, proper treatment as per cost accounting standard. Sorry. Next, treatment of cost of common siding. I have already told that there are one siding meant for catering 2-3 mines dispatch. So the cost of siding should be apportioned between the mines whose coal is being dispatched to that particular siding, and that should be on the basis of dispatch quantity. Coal transportation. There are two types of coal transportation. One is speedhead to stock, and second is speedhead to stock to railway siding. Now come to the point. What is speedhead? Speedhead means the mouth of the incline, coal face. That is speedhead. And stockyard is where the stock is dumping within the mine. That is stockyard. So if the stockyard is at a distance from the pit head, some coal transportation is there, but transportation is required to bring the coal from pithead to stockyard. This expenditure should be treated as production cost, because until and unless it comes in the stockyard, dispatch cannot be happened. So this is a part of the cost of production. But if the transportation cost is borne for transporting coal from stockyard to siding, that is a selling and distribution expenditure and is to be recovered from the customer as per the present pricing policy of the Coal India. So you have to segregate the coal transportation cost in two heads: pit head to stockyard and pit head or stockyard to siding. These are the two types of coal transportation in coal industry, and you have to, because nature of treatment is different. Pit head to stockyard cost is production cost. Stockyard to siding is a selling and distribution cost. So you have to be very careful to analyze this coal transportation cost. Again, as per government rule, company has to give back to the concerned mine after extraction of the coal fully to the government, and that should be at the same condition where it has been given. So there's, to bring it, there must be some cost, and as per act you have to provide some cost each year for mine closure. This is called mine closure expenses, and this is also treated as industry specific expenses. OBR cost adjustment and mine closure expenses, these are the two elements of cost, are treated as industry specific expenses for coal industry. Again, treatment of expenses of explosive detonator issued to contractor in outsourcing mine. Coal India gives in some mine in outsource. But the contractor is not empowered to purchase explosive and detonator in open market, because it requires license. So company issue that explosive and detonator to the contractor, but that has to be recovered from their bill. So this point should be taken into note from the store issue voucher, that whether that recovery has been made effectively or not. Otherwise, cost will be inserted. Treatment of cost of sub-area office, where there is a sub-area. Within a particular area, there may be a sub-area under which 2 or 3 mines will be operated. So the expenditure of the sub-area should be apportioned between the mines under sub-area. This point is also to be considered. Treatment of cost of production is zero or less, very less. You have to consider, you will see in different mines there will be no production, but cost has been incurred due to pumping or due to manpower, etc. So the cost of that zero production mine should be treated as abnormal cost and treated as in the reconciliation, booked under reconciliation statement. Treatment of prior period income and expenditure should be taken in the reconciliation statement. Treatment of cost of closed mines. If the mine has been closed, the entire cost of that mine should be taken into the reconciliation statement. Treatment of central hospital should be apportioned to the different areas or different mines where to whom it is catering. Treatment of cold storage over 5% of the book stock. In coal industry, there is a norm that book stock and measure stock. Measure stock means coal has been physically measured, volumetric measured at the year end or half yearly, quarterly. If there is a deviation more than 5%, that is abnormal cost, abnormal loss, and that should be treated as reconciliation statement. From where you will get it, you will get it from Form H record, where it is clearly written what is the major stock, what is the book stock. If you see there is a variation of more than 5%, you have to value that amount quantity more than 5% and should be taken into the reconciliation item. Recovery of penalties as per hindrance register, which we have already taken. Transfer pricing from coal to washery. I have already told that Coal India is operating washery also, where washed coal is being sold. So from Coal India, from colliery to washery, the coal is being dispatched at per notified price, including and it is direct material in coal washery and is treated as a direct material cost, including transportation cost and with all levies, because that is their landed cost. Dankuni Coal Complex also under Southeastern Coalfields Limited. It also produces coal gases and coal tar and ammonia, etc. different products, joint products and byproducts, and the treatment and the same at the same way the coal is being treated as a direct material cost at Dankuni Coal Complex at the notified price plus uh, all levies and transportation cost. These are the phenomena you cannot see in any other manufacturing company, but it is the inherent intricacy in the coal industry. Treatment of some special items. Capacity increased and decreased during the year. It is a normal phenomena in coal industry. Machinery introduced during the year, or it is out from the role that is surveyed of. So the capacity at the year end may vary from the capacity at the beginning. So a capacity enhanced or decreased should be computed from the list of machinery introduced during the year. Treatment of cost in fully MDO or outsourced mines. MDO and outsourced, there are two types of outsourcing, MDO and outsourced. What is the difference? In outsourced mines, coal is sold by the company, and in MDO mode, coal is sold by the party, and the company is getting a commission from the MDO. So that is the revenue. So the treatment of cost, even if it is in the MDO or outsourced mine, the statutory manpower is there in the mines. That is manager, that is safety officer, etc. So these are the cost to be borne by the company, even if it is MDO or outsourced mine. So you have to very careful for treatment of that cost correctly in the average cost statement. Treatment of cost of mixed mines, that is partly departmental, partly outsourced. Here you have to segregate the departmental cost and outsourced cost and give the treatment accordingly in the average cost statement. Apportionment of OB and coal. Different equipment, that is dumper, dozer, etc. are interchangeably used in coal industry, either for OB removal or for coal extraction. You have to give the due weightage of utilization of that equipment to give the correct cost of production. Determination of the cost of utilization of equipment, where same equipment is both coal and OBM, which I have already discussed. These are the different aspects of intricacies or treatment in the coal industry. Now, your examination has over, your data collection has over. Now you have to comment on your report. That is other observation and suggestion. I have jotted down some points which will be very helpful to prepare a good report. Mind-wise productivity and man and machinery, mind-wise machine availability and utilization performance, profitability of mines, mind-wise capacity utilization, performance of ongoing projects, project having time overrun and cost overrun, performance of controllable cost. So the data you have collected, information you have collected so far, verification you have done. On the basis of that, this information will be easily, you can comment on this point. Grade slippage or downgrade billing, overall performance of the mines, compliance of cost accounting standard, review of internal audit report, internal control and internal check system, variance analysis, other relevant points which may crop up during the audit. These are the common points for any coal audit. You have to keep it very carefully, the data and information. From that, you can only have the opinion on the above points. If you miss some data which I have listed above uh, and discussed earlier, you will not be able to report on this point. So that point is also to be very carefully noted and implemented while conducting the cost audit. Now, how you will added value to the cost audit report? Value addition to cost audit report. Sorry. Manpower utilization. In coal industry, you will see a peculiar phenomena that in some mines there is a surplus manpower, in some mines there is a shortage manpower. So you have to concentrate on collect the data for manpower utilization so that you can see whether there is a surplus manpower or not. Surplus means budgeted manpower and versus actual manpower. In coal industry, manpower budget is there. So you have to see whether there is a over manpower or under manpower. If there is a over manpower, that means the mines is over cost has been over on account of employee cost is more. So you have to comment on that manpower should be reduced. HEMM performance, that means different machines. We have already discussed the different machines utilized in the open cast mine. Mine capacity utilization, productivity of underground equipment. Underground equipment, I have shown the equipments, specific consumption of HSD oils, efficiency of explosive, specific consumption of power, productivity. These are all points you have to know. If you go to the mines, they will tell how these are being calculated, and if you know in detail, you can contact me. I will tell you in each and every aspect, because this seminar, this streaming is very time constant. So I cannot give the each and every details. Just I am touching this point only to keep you informed that this point has to be taken into consideration for a good value-added report. Next, break-even point, zero production mines, profitability, staggered rest of weekly days of rest, increasing trend on certain cost, overtime cost, cost of production, sales analysis. These are the points you have to add value. If you want to add value to the audit, I am usually consider all these points in my report. And as because I am from coal industry, I know how to calculate this, how to take the data from which statement. If you want to know better, but if you want to know more, you can contact me through my mail ID cma.alokes@gmail.com or through my profile give me a message. I'll let you know in detail. Thank you for patiently hearing me, and that is the end of my presentation. Now, if you can have, if you have any question, please give in the chat box so that I can answer to you, or you can give in the comment box. I will give it in the later after my free time. I'll give answer. If anybody has any help for conducting cost audit or to know more about cost audit in coal industry, I'll ready to help. I'll ready to guide you, because as a senior professional, I must have the duty to educate the junior, and that is only at the age of 65 years. I'm regularly conducting different live streaming in different topics, only to educate my junior professional, so that they can educate. Because I have seen the person of the professional are not easily give their give the lecture in the open forum, or they cannot educate the junior, only because of fear that junior may become his competitor. But I don't think so, because I know if I educate you, my work will be less. In my farm also, I educate my juniors so that they can do independently work. So if you have any question, tell me. I will give you answer, or I can give you later on. If you are, if anybody wants to work with me, can also tell me. I am in my farm. I can take him as a partner or as a assistant. One thing also I want to tell you all, at the last, that I am developed a website for cost CMA fraternity, CMA Guide India. The website is CMA Guide India. URL is www.cmaguideindia.in. It is the website link, www.cmaguideindia.in. You can take help that website for your education, for your knowledge sake, and we, myself and other 2-3 fellows are developing, maintaining these sites to cater the help to CMA fraternity. Thank you. I think nobody has any question. So thank you. I'm closing my PPT. I'm not ending my session. And if you have any question, give in comment box. I'll give you the reply. Good night. Good night to everybody.